What is going on YouTube? Hidden back making another brand new crypto TV episode. In today's video, we have to look at XRP, Ethereum, Bitcoin, as well as the S&P 500. Clearly, you know what we're already talking about. The fact that these markets are down 10% today, currently sitting at $1.63 trillion in current market cap, is pretty nuts to think just a couple of months ago we were at 3 trillion, which means we've pretty much fallen 50% from the top, which is insane to believe that people's portfolios within crypto have halved in just a matter of months. To see that amount of volatility happen in a market or in some sort of investment plan or portfolio is pretty incredible. Now, specifically what we have to talk about is yesterday we left off mentioning in the morning that we had actually bought in to short these cryptocurrencies, and we did. And if you guys did, congratulations, because you're actually up quite a bit of money. We managed to short the markets on Bityard, which we'll talk about in a little bit, but specifically you can see we closed below some major support levels on these cryptocurrencies, closing below price floors on pretty much every single coin. We're also starting to notice a massive correlation recently between cryptocurrencies like XRP, Ethereum, even Bitcoin, and the way it's correlating with the S&P 500. Notice that the market has also been dropping off steadily here since the minutes have been released from the top, but I do want to talk a lot about the S&P 500 too, because we may be very close to the bottom. That's all I'm thinking about here, and I want to kind of explain to you guys what I think about this, and maybe you can help answer the question and figure it out for me. So we're going to talk about that. We're going to talk about how much lower these coins are going to be moving to, so on and so forth. Everything is extremely oversold right now. I do believe this is a really good buying opportunity for most of these cryptos here. But with that being said, guys, today's video is brought to us by NEMESIS DAO. Hopefully you guys have heard of Olympus DAO. It's a pretty popular Ohm fork that you can actually invest with extremely high staking rewards. You can see for the most part, if I just go legacy, you can see the Ohm reward, or the APY on this is 448,000%, which is absolutely nuts. So we are going to be talking more about NEMESIS DAO and exactly how this is obtainable and whether or not you should invest in it, so on and so forth, and the risk level here, because obviously something claiming $500,000 in APY has extremely high risk. We're going to go over all of this at the end of today's video, but I just wanted to bring this project to your awareness here, because I think it's pretty interesting what it offers here. But with that being said, guys, definitely make sure to smash the like button, turn on post notifications, subscribe. Remember, we're going to be going over NEMESIS DAO at the end of today's video, and they are linked in the description. But with that being said, let's dive into today's episode. So guys, it's kind of hard to even know where to begin. Currently, like I said earlier, we are pretty much down. Every single cryptocurrency is down besides stablecoins, which makes sense. Everything is pretty much dropping double digits. SHIB is down 20%. Polygon 15, Avalanche 17, Doge 13. I'm very excited that we actually managed to short these cryptocurrencies, every single thing. It's crazy to see Litecoin trading at number 21, considering a couple, like last year was trading at number 7, which was insane. But pretty much every single cryptocurrency is absolutely falling and dumping off the face of the planet here, which makes sense. And it's unfortunate because the S&P 500 is in direct correlation with the way these markets are moving. The one thing that I think about when I see the correlation between the S&P 500 and things like XRP, Ethereum, and Bitcoin is the S&P is obviously a lot less volatile than major cryptocurrencies, which also screams, hey, maybe we've hit a bottom within the S&P 500, which could reference maybe some money moving back into these markets and seeing prices swing up. So I want to reference that. I've also seen a lot of comments saying we're not talking much about XRP, but hopefully you guys understand why I don't have to mainly be focused specifically on XRP when XRP is in direct correlation. Like, just take the past 3 days. 1, 2, 3. Now let's look at Ethereum. 1, 2, 3. Let's look at Bitcoin. 1, 2, 3. Let's look at S&P 500. 1, 2, 3. Hopefully you notice a pattern. And it goes even beyond that. We're oversold on the daily on XRP. We're oversold on the daily on Ethereum. We're oversold on the daily on Bitcoin. We're oversold on the daily on the S&P 500. Hopefully you guys are picking up what I'm trying to put down, that they are so correlated with each other right now that it doesn't matter if I talk about Ethereum more than I talk about XRP, or XRP more than I talk about Bitcoin, because they're currently all related to each other at this point in time. And what happens to one happens to the other. So the thing that I'm noticing too more than usual is the fact that we've had, some pretty extensive falling wedge patterns here on most of these cryptos. XRP, what I forgot to update you guys on a couple of days ago or 2 days ago was I did draw on a falling wedge fractal here, which you can see is right here, in line, very similar with the way Ethereum's is and the way Bitcoin is in this falling wedge fractal here. And you can see this is a new trend that we've had. And ultimately, these usually tend to be biased on breaking to the upside here, but unfortunately, they're breaking down, which is interesting. So the fact that we're continuing to slump lower is of an interesting sign. But we did short this the second we got confirmation, and I explained here that we'd buy into XRP and Bitcoin the second we get confirmation of closing below our point C uptrend here. We saw this on the 20th here. We closed below this uptrend, and that was a clear opportunity to buy in and leverage this to the downside here. And that's what we did, not just for XRP, but for Bitcoin too. And you could have done it for Ethereum. Second, we saw Ethereum close the daily below its uptrend here was a huge short opportunity. Bitcoin, we've also entered. You can see 3 days ago, we closed below our clear support level at about 41,775. The second we saw closing below that, that's when we entered a trade, shorting the markets here, thinking that the bottom would be, and I've also mentioned this here, that like we tend to have this like stair-stepping pattern, which is interesting. We actually fell lower than that, which I was surprised about. I more so was expecting consolidation. Didn't happen. But you can see right now we're trading below it. We broke through 40K. We're falling down to 35, and the lowest point to go to after 35 is at $31,000 or $30,000. So the expectation of falling lower is really high. The crazy thing, the only thing that could save us is the fact that we're extremely oversold on these cryptos. XRP2. XRP's next lowest point is probably closer to like 52 cents than it is where it's currently trending. And we got very close. We got to 54 cents here. But everything is currently oversold right now, which is a sign that, hey, maybe we're extremely undervalued, which we are, and we'll start to see some trends back up. And now that I've talked, I feel like enough about XRP, I really want to focus on the S&P 500 because I feel like this has slowly become one of the most influential things and manipulative things on the major cryptocurrencies here. And that's why it's so important to talk about this. So the main thing that I look at within the S&P 500 is where it's currently trending. I was very, very, very saddened by the time we broke through our moving average here. This was a vital support. There was actually a lot riding on this. We had triple bottom action right here. We broke through it, which is unfortunate. Clearly, we do work in like stair-stepping patterns here. There are other supports that we're currently like hitting right now. You can see if we just draw this out, we have this level here, here, here. It goes all the way down if I can move this. You can kind of see that pattern that I've drawn, and I can draw a horizontal line to kind of reference this or represent that horizontal price floor. It's exactly where we're trading right now, which is interesting. You can see supports, resistance, resistance in the past, and here we are again battling it as a means of support. So it's interesting to see how much lower we're going to drop off of this. It's very, very, very scary in the fact that we broke through these major uptrends, the major moving averages, Bollinger Bands, support levels, price floors, and fell even lower. This is a big sign. And obviously, it doesn't matter at this point right now how these coins are trading because we had the S&P break through some pretty vital support levels. And when I saw the market stump on the S&P 500 and fall down, I knew exactly what was going to happen to the cryptocurrencies, which is another major drop in the candle, which is exactly what happened here. Yesterday was a huge drop, broke us through major falling wedges here. We entered a short on most of these cryptocurrencies actually 2 days ago on Bitcoin as well as XRP here. Hopefully you guys did too on BitYard. We made it very clear in yesterday's video, I believe, that we were shorting these cryptocurrencies because of the rejection that we saw breaking through these supports. So we've pretty much just entered a short on BitYard, clicked to 10x, clicked the amount we were shorting, market orders usually, and then we just typed in the amount we're going to leverage. So if we typed like 900 for XRP, and we click sell short, we're pretty much gaining on the fact that markets are dropping. You can then create a stop loss in case we fall even, or in case we start to reverse back upwards, which is just a way to protect us, which obviously we have set up. But for those that are new, definitely make sure, or who have already signed up, make sure to click on Mystery Box to actually earn some free cryptocurrency. It's very cool. So make sure to check that out. Link in the description down below. Please make sure to sign up and get your free cryptocurrency. This way you can also be, informed and stay on track with us in regards to how these markets are moving. When we short, you can have that opportunity to do it too. And you can understand how these charts actually play out because I also reference off of BitYard. So it's cool to use it. And you don't actually have to put in and trade around with real money. You can very easily use a demo account and trade around with demo money, monopoly money, and just test your skills and reference what we talk about. And then when you're ready and comfortable to switch to a actual live account with real crypto, you can do that. My only concern and how much lower we fall to is to these moving averages on the weekly. This is the only thing that I think about in regards to how much lower we could move to. Currently, we've fallen about 10%, I believe. 8.5 for 3%. The lowest, I think, maybe 17 to 24. 24 being rock bottom. I'd be very shocked if we did drop all the way to there. Mainly, that would send us into oversold on the weekly, which we haven't seen since also the drop because of COVID here. So this is the farthest I can see us going to, which is we're still in a better position than we were, as last time moving averages were much lower, trading at about 2,700 points. Now we're trading at about 3,600. So we're much higher up. We're actually using the top of this uptrend here in green and in white, which is why I think this is the lowest point we could move to. But that would also signal that most of these cryptocurrencies would also follow suit. So I'm hoping that this is the lowest point we want to go, but there's this big chance now that we have broken through a major uptrend that the lowest point we're going to be moving to is down at 3,800. So the only advice that I have to something like this is, obviously I'm not buying in right now, but I put a little bit in just in case this is the bottom here. But the next time I plan on buying back into stocks to dollar cost average would be a fall and a pull back down to the support at 3,900. I'm not going to touch that. Maybe that takes the rest of this year. And if it does, this is when I'll put my money into it. But otherwise, that's pretty much going to wrap up today's video. I do want to talk more about NEMESIS DAO with you. I want to give a huge shout out to NEMESIS DAO for sponsoring today's episode. As with all cryptocurrency projects, especially ones with high staking, please do your own research and never invest anything you can't afford to lose. So guys, decentralized reserve currencies have been a growing trend in DeFi since Olympus DAO revealed its 1 million% APY, and many projects have forked Olympus DAO to create alternatives. And one of those projects is NEMESIS DAO, which we're going to review today. Now, it has an insanely high APY, and it's on the Binance Smart Chain, and their token NMS was first tradable on the 15th of November of 2021. Now, their OM forked extremely well, and over the past 2 months, they have accomplished some pretty incredible things, including a 1 million% APY on staking, and they also have the highest APY percent compared to market cap among the other OM forks on BSC. They also have the strongest liquidity among other OM forks on BSC, and are also aiming to become the safest OM fork on BSC as well. And as you can see by their Telegram posts, they have quite a lot of accomplishments going for them. So guys, NEMESIS DAO is a decentralized finance reserve currency protocol built on the Binance Smart Chain, and the protocol is powered by the NMS token, which is backed by a basket of assets like BUSD and liquidity pair tokens. And NEMESIS DAO introduces unique dynamics into the decentralized finance market through bonding and staking. And NEMESIS DAO aims to become a significant reserve currency on the BSC Smart Chain, one which is truly owned and maintained by a decentralized protocol which serves the majority. Now, their goal is for NMS to be a common trading pair which is backed by real assets. At the highest level, NEMESIS DAO consists of its protocol managed treasury and protocol owned liquidity with staking and bonding options. Now, as the protocol controls the funds in the treasury, NMS can only be minted or burned by the protocol, and this also guarantees that the protocol can always back one NMS with one BUSD. Now, as the protocol accumulates more PCV, more runway is guaranteed for the stakers. This means that the stakers can actually be confident that the current staking APY can be sustained for longer term because more funds are available in the treasury. Now guys, staking is the primary value accrual strategy for NEMESIS DAO, and stakers stake their NMS tokens on their website to earn rebased rewards, and the rebased rewards comes from the proceeds from the minter sales and can vary based on the number of NMS staked in the protocol and the reward rate set by the monetary policy. And staking is a passive long-term strategy, and the increase in your actual stake of your NMS tokens actually translates into a constantly falling cost basis converging on zero. Now guys, bonds allow users to mint NMS from the protocol at a discount by trading it with liquidity tokens or LP tokens or other assets. And bonding is a cross between a fixed income product, a future contract, and an option, and the protocol quotes the minter with terms for a trade at a future date. And these terms include a predefined amount of NMS that the minter will mint and the time when vesting is complete. Now, bonding is an active short-term strategy, and the price discovery mechanism of the secondary bond market renders bond discounts more or less unpredictable. Therefore, bonding is considered a more active investment strategy that has to be monitored constantly in order to be more profitable as compared to staking. And guys, liquidity bonding helps the protocol to actually accumulate and lock liquidity, while reserve bonding allows the protocol to grow its treasury and thus its backing per NMS faster. So guys, definitely make sure to check out the links in the description where you can learn more about their project and high APY staking. Otherwise, huge shout out to NEMESIS DAO for sponsoring today's episode. As always, make sure to smash the like button, turn on post notifications, subscribe, and I'll see you guys in tomorrow's video. Peace.